Thanks for joining us today at the Mining News Network podcast. Let's get started.
Hey everyone, welcome back for another deep dive. This time we're going to be taking a look at gold, specifically the U.S. government's massive gold reserves, and what could happen if they decide to change how they account for all that gold. Get ready for some pretty surprising financial facts. Like, did you know that the U.S. government's gold is currently valued at a price from the 1970s? Yeah, you heard that right. We'll be exploring that and some potential economic scenarios, including one expert's prediction of Armageddon in the gold market.
You know what's really fascinating about this? Is this goes way beyond just numbers on a balance sheet. We're talking about the U.S. dollar, global finance, maybe even the whole system as we know it.
Whoa. Okay, so let's break all this down. First things first, gold itself, it's been on a tear lately, right?
It has.
Up over 40% this past year, beating even the S&P 500. Investors who love gold, those safe haven seekers, they must be feeling pretty smug right now.
Oh, they are. This surge has definitely energized those who see gold as the ultimate safeguard, especially with all the economic uncertainty in the air right now.
Right, and so picture their excitement when you factor in the sheer size of the U.S. gold reserves. We're talking a whopping 261.6 million troy ounces, practically 8,200 metric tons. That's more than any other country on the planet.
And here's where it gets really interesting. The U.S. government values this gold at a fixed $42.22 per ounce. And that price is straight out of the early 1970s.
Hold on, so you're saying with the current market price at about $2,920 an ounce.
There's a huge gap.
Almost unbelievable. We're looking at a potential $750 billion difference between their books and reality. That kind of money could make a serious splash. So what if they decided to, monetize this gold, turn it into usable cash?
That's the million-dollar question, isn't it? And it's one that's been swirling around, especially since U.S. Treasury Secretary Scott Bessent hinted at the possibility. He said, and I quote, "We're going to monetize the asset side of the U.S. balance sheet for the American people. We're going to put the assets to work."
Put the assets to work. Sounds intriguing, but also a little ominous. What could that actually look like in practice?
The one expert, Jay Hatfield, the CEO of Infrastructure Capital Advisors, he has a rather dramatic take. He's predicting Armageddon in the gold market if the U.S. starts selling off large chunks of its gold.
Armageddon. Okay, now you've got my attention. Why would that happen?
Well, remember how we talked about central banks, especially China, being big buyers of gold lately?
Right.
That's been a major driver of the price surge. Hatfield thinks if the U.S. suddenly becomes a massive seller, it can reverse that trend, potentially leading to a market crash.
So it's not as simple as just cashing in on that potential profit, huh?
Not at all. It's a tightrope walk. On one side, you've got the U.S. government grappling with some serious economic challenges, a growing deficit, ambitious spending plans, and interest payments that are really starting to add up. In fact, House Republicans are even floating a proposal that could add a massive $6.5 trillion to the national debt.
Yikes, that's a lot of pressure to find some extra cash. I can see why that $750 billion in gold starts to look pretty tempting.
Exactly. David Teeters, a professor at ICE Business School, he sees it as a way to potentially deleverage the government's balance sheet, give them some financial breathing room. But there's another side to this coin, a global one.
It's easy to get lost in all these numbers and economic jargon, but this isn't just some abstract financial game. What happens with the U.S. gold reserves could affect us all.
Absolutely. Think about your retirement savings, for example. Let's say you've invested some of it in gold to protect against inflation. If the U.S. floods the market with gold, prices could plummet, and suddenly your nest egg isn't looking so secure.
That's a really powerful point, and a little unsettling, honestly. It just shows how interconnected things are.
Exactly. And it also raises a question about gold itself. Is it still a relevant store of value in the 21st century? Or is it becoming outdated?
That's a big one. I mean, some people argue that gold's importance is fading, especially with the rise of digital assets like cryptocurrencies. But then you have others who are still diehard gold believers.
It's almost a philosophical debate, isn't it? You've got this ancient, tangible asset, gold, that has represented wealth for centuries. And then you have these new intangible digital assets like Bitcoin, promising a decentralized future.
It's like old versus new, physical versus digital. Fascinating stuff. But back to the U.S. government, what are their options here? They've got this potential gold mine, but it seems like any move they make could be risky.
Yeah, it's a tough call. Sticking with the status quo means leaving that $750 billion untapped. But trying to cash in could create chaos. Plus, they need to consider the impact on the U.S. dollar's status as the world's reserve currency.
It's like they're juggling chainsaws while walking a tightrope. Talk about pressure. You know what really struck me in our research was David Teeters' prediction about a potential global currency reset. That sounds like a pretty drastic scenario.
It does, but it's not entirely outlandish. I mean, currency resets have happened throughout history. And considering the levels of debt and instability we see today, some experts believe another one is inevitable.
Okay, so let's say that happens. What does a global currency reset even look like for everyday people?
It's hard to say for sure because it really depends on how it's structured. But one possibility is a devaluation of all currencies against a new reserve asset. This could impact everything from your purchasing power to your savings.
So this is definitely something worth keeping a close eye on.
Absolutely. And this is where the conversation about alternative assets like gold and Bitcoin gets really interesting.
Because they could act as a hedge against currency devaluation.
Exactly. That's the idea behind the safe haven appeal. Some see gold and even Bitcoin as a way to potentially protect their wealth if the financial system goes through a major shakeup.
That's a wild thought, but it makes you think.
It does. And even if you find these scenarios unsettling, I think it's important to at least think about them, explore different perspectives, and be prepared for whatever might come.
Absolutely, knowledge is power, and the more we understand these complex issues, the better decisions we can make.
Couldn't agree more. And it's not sure about understanding the big picture. It's also about practical things like diversifying your investments. Don't put all your eggs in one basket, so to speak.
That's always solid advice, whether it's gold, stocks, crypto, or anything else.
And perhaps most importantly, be adaptable. The financial world is constantly shifting, and we need to adjust our strategies as things change. You know what's really interesting is that this whole situation with the U.S. gold reserves and the potential for a global currency reset, it highlights something really fundamental about our financial system.
What's that?
It all boils down to trust. Trust in governments, central banks, the institutions that hold it all together.
That's a great point. And when that trust starts to erode, things can get pretty shaky fast. We've seen it happen time and time again with financial crises, government bailouts, and just growing skepticism toward those institutions.
Exactly. So the U.S. government's decision about its gold reserves isn't just about economics. It's a test of that trust.
So if they choose to monetize the gold in a way that shakes the market or weakens the dollar, it could further erode that trust. And maybe that even pushes people towards those alternative financial systems we were talking about.
You're right on the money there. It's a very delicate balancing act.
As we wrap up this part of our deep dive, I think it's safe to say the U.S. gold reserves are way more than just a pile of shiny metal. They represent financial power, economic stability, and maybe even a potential catalyst for major change.
And as we've discussed, the decisions made about these reserves could have massive ripple effects, not just for the U.S. economy, but for everyone.
It's mind-boggling to think about how these decisions could reshape the whole financial landscape.
It really is, and it just shows how important it is to think critically when it comes to finance and economics. Don't take things at face value, question assumptions, look at different perspectives, and do your own research.
Great advice for everyone, no matter how much you know about finance. And it's what we try to do here on the Deep Dive, right? Encourage our listeners to be active in their own financial education.
Exactly. It's about giving yourself the knowledge and the ability to make informed decisions. Sometimes that means challenging the usual way of thinking and exploring ideas that might seem a little bit out there.
Like that idea of a global currency reset, or those alternative assets like gold or Bitcoin playing a bigger role.
Exactly. These are ideas that might have sounded crazy a few years ago, but they're definitely gaining traction as the current system shows its cracks.
It's a fascinating time to be following all this, and it reminds us that the world of finance is never standing still. It's always changing, and we need to be ready to adapt and open to new ideas.
Absolutely. And as we've seen in this deep dive, the U.S. government's gold reserves are a key part of this evolving puzzle. What they do with these reserves could impact the entire global financial system.
So as we wrap up this deep dive, I want to leave our listeners with a final thought-provoking question. Imagine you're in charge of the U.S. economy. You're facing a growing deficit, rising interest payments, ambitious spending plans. You've also got this massive potential gold windfall just sitting there. What would you do?
That's a great question, and there are no easy answers. It forces you to think about competing priorities, potential risks, long-term consequences. There's no right or wrong answer, but the process of considering those options, weighing the pros and cons, and forming your own informed opinion, that process is incredibly valuable.
Exactly. It's about engaging in that critical thinking process, understanding the complexities, and recognizing that there are often multiple perspectives and potential outcomes.
And who knows, maybe one of our listeners will come up with a brilliant solution that no one has thought of yet. Never underestimate the power of collective wisdom and diverse perspectives.
That's what makes exploration and open dialogue so powerful. We may not have all the answers, but by asking the right questions, challenging assumptions, and looking for different viewpoints, we can work together to face these complex challenges, and maybe even create a more stable and fair financial future for everyone.
Well said. I think that's a perfect note to end on. Thanks for joining us on this deep dive into the world of gold finance and the U.S. economy.
And thank you for sharing your expertise and insights with us. Until next time, keep those brains engaged and those questions coming.
Thank you for listening to the Mining News Network. If you found this content helpful, please don't forget to drop us a like and subscribe. If there are topics or companies that you would be interested in or like us to cover next, please leave a comment down below.